Like, so to me, it's like you elevate Waller, Powell probably resigns his seat in that scenario, and now you have two governors that she could name in addition to the chair. And, that allows you to put your fingerprints more on the Fed than nominating someone like a Hassett or a Warsh, someone that would be perceived as more politically pliant.
RenMac Off Script originated as a weekly internal research meeting designed to summarize and discuss what happened in Washington, the markets, and the economic data over the past week. It was always intended to be and remains a free-flowing conversation with no discernible objective other than to extract the wisdom and opinion of our analysts and their expertise. This is a conversation among colleagues. Individual circumstances are unique and nuanced. Do not mistake these conversations for investment advice because it's not. Here we go.
All right, welcome to RenMac Off Script, where we openly discuss markets, economics, policy, history, and life. It is Friday, the 27th of June, 2025. I'm Steve Duttenhofer.
I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
And as a reminder, all the charts we posted, we talk about here are posted on our Twitter and LinkedIn accounts. And if you like what you hear, reach out to renmacaccess.com. There's obviously a lot more beyond this podcast that we do at RenMac. So lots to get to. Jeff, one of the big stories this past week was what happened in crude, given the events in the Middle East. You told us last week that when to sell crude when the missiles started flying, and crude's done nothing but go down since. What did you pick up beforehand, or what were you looking at to assess that going into it?
Well, I'm going to hit that, but I got to say, I think you deserve a shout out for closest to the pin in our event yesterday. And not only that, this is a 200-yard shot. Like, that was a 200-yard shot. You were what, within 3 feet?
I was within 3 feet. That's right.
Within 3 feet, closest to the pin. But, and this is really the kicker. This is the Steve Duttenhofer skill set. Your score divided by the number of drinks you had was really, really impressive. And we're talking, this is the 16th hole. So I'm like, wow.
Yeah.
That is.
It was a lot of early mornings. If we had played 36, I really would have gotten good.
The swing juice was definitely in your favor. And look, you go out there, people have a transfusion or whatever, and you're drinking Tito's Reposado.
No, not Tito's. No. Some other,
sorry.
Yes, some other Reposado.
Tequila, right.
The twist
on the
orange.
rocks.
On the rocks.
With an orange, right? Yeah, way to keep yourself from getting scurvy. Let's talk about crude. So last week we said on this, we'd sell as the missiles start flying. Look, that's not really anything more than kind of this three-dimensional chess game that we're always playing in this business. And I think it's really, really important, and that's what really distinguishes, I think, the successful investors from the average investor or the poor investors. Which is, for crude, it was in a downtrend, right? So what the downtrend is saying is that there are structural issues that are suggesting that the price of crude or the trajectory of crude should be lower. It got overbought in the near term, and what that means is that something usually exogenous was taking place that was forcing that higher, still within the context of that downtrend. Pretty obvious in this instance that it was the issues going on in the Middle East. And then when we looked at the option market, we looked at poly markets, we looked at some of the other things and see how much of that is being discounted, right? And I'll give you a great example, which was, I think it was for August. By August, the markets had expected almost an 80% chance of U.S. military action against Iran. So what that says is that the market, even though it hadn't happened, the market was already discounting that and putting that into its pricing. And that's the important part about markets, is that there's a probability that something can happen that will start to creep its way into the price. And so for us, it was just saying this is already basically discounted in or priced in. Maybe 20% of it wasn't. So when the missiles fly or whatever, the bombs drop, the mops drop, that was probably a better opportunity to sell crude than it was to buy it, because this wasn't new information. In fact, it was old information that had already been acted on. And so that was really the basis of the call. So back to this downtrend and just kind of marrying sentiment with trends. That's what we do.
Oh, it was a great call. We got a lot of pushback on that for sure. So Kudos to you, Steve. Given that, what is there any new information coming out of the Mideast now, or are we sort of moved past that now?
Well, there's been a debate in Washington whether it's misinformation coming out with respect to the effectiveness of the attack. Look, I think the fact that we're not seeing any more escalation on both sides is encouraging. I don't know that it's in either the interest of Israel or Iran, at least in the near term, to do anything provocatory. So I think that's, I guess, the positive that I would point to right now. Maybe I'm glass half full kind of guy. But yeah, I think right now what we're going to watch is what happens with Iran's nuclear aspirations moving forward. One thing that's been said, it's true, is you can't bomb knowledge. And so are they going to try to reconstruct their nuclear program? And my guess is that's going to be where a lot of these talks moving forward are going to focus.
What is the final take on this? Did we obliterate it? Is it still operational? Did they move it all out? I've been on the golf course with Steve, so I missed yesterday.
Well, I mean,
What's
to be
CNN
fair,
saying about it?
What is the truth seeker CNN tell us? Where are we?
Oh, here we go again.
well, with the truth seekers versus what's on Truth Social, you're not surprised are, I guess, in conflict. Look, I'll just say this. Anybody that leaks anything, having worked in government, has a motivation behind it. My sense is that we're probably not going to know the full extent of the devastation probably within the next few weeks. I do think there's an outstanding question with respect to what did Iran do with the uranium that had been enriched prior to the bombing. We've seen video evidence that suggests, these trucks coming right before the bombs, that they probably moved it somewhere. Where was it moved? I think is going to be something that is going to be subject to speculation moving forward. But my sense is that the other thing to sort of keep an eye on is going to be how much damage was done to the centrifuges. Again, I think we'll probably get more reliable estimates in the coming weeks. But those are going to be the issues that I think are going to continue to drive the discussion. So to answer your question, you ask 10 different people in Washington, you're probably going to hear 12 different things. I don't know that that's unique to this, but I think that's sort of how I think about it.
Can you outsource enrichment? Can you be like, I got a guy for that, and you just send your 60% out somewhere to have it enriched and come back as 90?
Well, that I don't know. But then there was a question of, okay, where are they going to send it to Russia? And is Russia going to help them weaponize this? I think that went into a lot of this calculus where, okay, how do all this sort of come together? I don't know that it's in Russia's interest to come to Iran's support here. Obviously, they have their own issues with Ukraine. Yeah. But if you do that, you're going to invite these sanctions that Trump has been so far willing to withhold. So that sort of leaves, I think, Iran in a difficult position as to, okay, where are our friends? What can we really do with this? And I think that's where you start to see the limitations. They can't send it to China either. We could talk maybe about this a little later, but we're starting to see some, I guess, baby steps, but signs of progress nonetheless on the trade front. Again, I don't think it's in China's interest to really do much to come to the aid of Iran either.
And I saw Trump was formally nominated for a Peace Prize, Nobel Peace Prize. Is that true?
I mentioned it before. I'll say it again. He wants a peace prize. And I just, as someone who lives in the U.S., lives in the world, I think peace is good. I hope he gets it. I hope it's for reasons that are merited. But yeah, we'll see what the Nobel Prize Committee decides to do with that.
I am on the record saying the market will top when Trump wins the Nobel Peace Prize. So I don't know if that's really true, but that's kind of the way the market usually thinks, right? When people all come together and they're like, the great evil man is now getting the Nobel Peace Prize, that's when you sell equities. We'll see. We'll see. Come on, Neil, you got to have something in this whole fight.
I just, I think the bombing of Iran is basically this was in the last 2 weeks, like whatever, it's symbolic bombing too of Obama's political legacy.
Yeah,
should never have called him out on that White House Correspondents Association dinner because now no one is going to remember you.
Mm-hmm.
You thought you were going to be this transformational figure, and now people are calling Donald Trump daddy at the NATO summit. So I didn't have Donald Trump's social media team using Usher Daddy's home in an Instagram post on my bingo card for 2025.
Yeah.
Well,
Yeah.
either did Jay Powell, I don't think. So let's shift there for a second. Neil, just on your thoughts on the potential for a shadow Fed. I want to get to the econ outlook as well, but let's start with Powell.
We already have a shadow Fed chair. His name is Christopher Waller. He was out there not very long ago after the June FOMC meeting, basically telling everyone that he wouldn't rule out a July rate cut. So we have a shadow Fed chair, and he's already working as a governor in the Federal Reserve's Board of Governors. I also think like he presents the most upside for Trump, because if the idea is you want to put like-minded people at the Fed, then Waller is going to make it more likely that you have two vacancies to fill, right? Because remember, like logistically, the first person that's up is Kugler. Her seat is up in January. And then Powell's term as governor ends in May. As chair ends in May, and he could serve on as a governor for an additional 2 years. If you needle him and cajole him, like, he doesn't have to leave. He can just not be chair and kind of just stick around. I mean, I think that's, it's how far do you want to push it? It's not like he needs the job, so he can just stay on out of spite. You have Waller, and then you can pick two more people. So that gives you an opportunity to kind of, we talk about packing the courts. We can talk about packing the Fed. So I think Waller's the best pick. And he's had really good calls. I mean, I think on the merits, it makes sense. I mean, not many people were saying that you would get a trimming of job openings without an increase in unemployment back in 2022. Waller was one of the few people saying it. And meanwhile, you had the likes of like Larry Summers and Bill Dudley saying, well, it'd be impossible to kind of aim policy just at openings alone. So, Waller's kind of stuck his neck out in the past. He's willing to think, out of the box. I think that's exactly what Trump needs in a chair.
So I wonder, and I don't know if he's commented on it, but certainly I know you have thoughts around this Atlanta Fed tracker, right? The number came out. It suggests that the economy is doing pretty well. I think the eco bulls out there are latching on to this as confirmation that they're right. You have thoughts around that?
My thoughts around it are we had negative growth in the first quarter. Okay. And most of the contribution in Q2 is just a swing around trade. So when you look at GDP net of trade, growth is basically 1%. So that's all tariff noise, right? Like you had imports dragging GDP growth by a lot in Q1 because imports rose because people were front running tariffs. Now imports are coming down, and that's lifting GDP growth because the tariffs have happened, and we're kind of adjusting to that. I think it's important to just focus on the more stable measures of activity, and that's the labor market. And the labor markets continue to cool, and personal consumption continues to slow.
So you have the Fed easing when and how many?
Well, I don't have the Fed easing. The bond market's caught up to us already. I mean, in some respects, the bond market currently has the Fed cutting 3 times beginning in September. I think the risk is that they'll end up having to do more because if they go in September, you're kind of in this dead spot over the summer, and it kind of could get you a replay of last year where you kind of think things are okay, and then all of a sudden you get like 0 on jobs and 2 to 3 tenths increase in unemployment. When you look at continuing claims, it's pretty clear that the unemployment rate is going to rise over the next month. And as I've said, I mean, the unrounded unemployment rate has been going up 1/2 of 1/10 in each of the last 4 months on average. And it looks like the pace is about to accelerate somewhat. So, I wouldn't rule out like the unemployment rate going from 4.2 to 4.4 in the next week. So, I mean, I think that's going to catch people's attention. And, when you look at, just look at a chart of continuing claims. I mean, it's rising 7% a year. Historically, when has it just stabilized like that? I mean, like some response is going to be required.
And this question comes from our good friend Aaron Freeman down at Freeman and Freeman Private Wealth in Conroe, Texas. But is that employment or unemployment data being affected by AI?
Well, I'm sure at some level, like everything is being affected by AI, but I don't think that that's the proximate cause for why continuing claims are going up. It's going up because labor demand has cooled and the hiring rate is really low. And that has probably a lot to do with how firms feel about the economy. I mean, business confidence is down. Like the Business Roundtable, released a confidence index survey or something earlier this week for the second quarter, and it shows, CEO confidence is slowing, CapEx intentions are dropping, employment intentions are cooling. So, it's all kind of, I think related.
So let's pull on that a little bit. It seems like we're far apart on the econ outlook and what the markets are telling us, right? Jeff, would you characterize that as true or not true?
I think it's maybe a little true if you look at the index. I don't think it's necessarily as true if you look underneath the surface. If you look, I mean, we've been saying this for almost a year now, maybe longer than a year. It's very hard from a sector by sector perspective to look at what's going on and make a call, because within, say, industrials, good things are happening, but bad things are happening. Within discretionary, which would be, almost a litmus test for Neil's world, is services and things like restaurants, hotels, et cetera, doing well. Luxury goods, housing, automobiles not doing well. I mean, very bifurcated, right? So, in a way, when we look at the market, right here making a new high or about to make a new high, you could say, well, there's this huge disconnect. But under the surface, it's less so. And I think you've got the AI trade happening, you've got tech happening, you've got the productivity trade happening, as I would call it. And that certainly is probably something that is going to drive Neil's world, right? And the market's reflecting that. Kind of the traditional, do you go out and buy a car? Do you go out and buy a house? That's certainly in line with how Neil's thinking about the world as we see it. So I think it's a little bit more nuanced than the disconnect between markets and Neil's world. But certainly on the surface, I can see where people would say that. But once you start digging down, you can see slowness in these various areas. So I do think that that's worth noting. Maybe the other part of it, which is a little confounding, and obviously we have a lot of clients that are in this world, is healthcare. Healthcare usually catches a pretty good bid when things are softer or things are about to soften, and that just has not been the case. I mean, there are a few episodic areas within healthcare that still look good, but some of this is the regulatory environment, Medicare, Medicaid, et cetera. But the big pharma names, the biotech names, a lot of these names are still under a lot of pressure, which you'd expect in many instances. The more defensive areas of the market would start to kick in, and that really hasn't happened, with the exception of utilities, which have been strong, but that's also a kind of power consumption trade that's been happening. I think maybe the biggest disconnect, and where Neil and I would disagree, would be I think his outlook for the economy, or the challenges to the economy, are certainly there, and he sees them more vividly than maybe the market's seeing them. Financials are doing very, very well. In fact, we would argue that they're the top momentum group right now, and some of the banks. Now, those aren't the regional banks; they're kind of the big heavies, if you will, the Goldman Sachs's and the like. There's a deregulatory aspect to this, which I think is important, kind of the freeing up of capital. So that might be what's behind it. But if we're going to hit aggregate demand, really strongly, and it's going to be negative, the financials will feel that. And so far, they've held their own. Regionals less so, and that might be the message there. But the deregulatory aspect of this, I think, is important.
And we're still going into a period with pretty strong seasonals, right? for the broader
Well,
market.
interestingly enough, yeah, the last year or two has actually flipped the seasonal strength, which was always December. December was the strongest month of the year, and now we're seeing that in July. So July is now over the last roughly 97 years. July is now the strongest, best month of the year, and that also importantly applies to the mean and the median, right? So, real quick statistics lesson: the mean is the average, but that obviously gets dragged down by outliers. The median is kind of your base case of what happens most frequently, and in both those, July is the strongest month.
Nice educational piece. I had to write that down.
We provide so much here, so much, ridiculous.
And and we'll also do our.
I got that right, by the way. Let me double check my notes.
We'll edit it out. We'll edit it out. It's not right. It's like the was that those back to school specials that we used to have. What happens on the Hill. So, Steve, let's turn to you. Coming into July.
That's on my TikTok all the time. I'm saying I am just a bill or whatever. Yeah, right.
You got the big beautiful bill, maybe, or other things. Steve.
Well, I was just thinking about what Jeff was saying, about July now being Christmas and this whole Christmas in July thing. And then with Santa Trump, is he going to deliver coal on that, or is he going to deliver presents? And I think that's where we get into all the things that are going to be really potentially big this month. So you talk about the big, beautiful bill. It's undergoing a lot of cosmetic changes as a result of the bird process. In terms of the latest bird droppings, as the term is, we have now seen...
It just gets better and better. Is that right? Is that the new one?
I don't know if it's new, but I was a former Senate staffer, something I used to say all the time. But this Republicans' initial proposal with respect to Medicaid, something Jeff was also just mentioning, was ruled ineligible. That's about $250 billion they were hoping to save. So long story short, Republicans are working hard to meet this self-imposed July 4th deadline. Again, it's just self-imposed. I get while the administration wants to try to have this resolved so Trump can have a nice ceremony that day, also because these things don't tend to age well. I get the understand why they're trying to rush it. I just think it's sort of running into the realities of process with respect to the bird rule in politics. You have a lot of fiscal conservatives that are still concerned about the deficit. And the more of these savings that you were counting on to get there, it's just going to make it very difficult to meet that. So I do think it's worth noting the push by the White House. So maybe prior to this 15-20% chance that they would actually get this done by July 4th, I'd probably raise that now to 45. I'll believe it when I see it. The thing to watch this weekend is going to be, can the Senate actually pass this thing? And then the question will be whether or not the support's there in the Senate. As they say, the math isn't mathing at the moment in terms of the number of votes. But again, that may happen over the course of the weekend, so stay tuned on that. Then outside of that, I think people are forgetting about this, but we have this July 9th reciprocal tariff rate coming up. And my suspicion is that there are going to be some winners and losers. And I think there's been some reinforcement based on comments that Treasury Secretary Bessent made that sort of confirmed what Commerce Secretary Howard Lutnick was saying, that there's still this universe of 18 trading partners. The administration feels positive about 10 or 11 potential agreements that are saying imminent that may come quickly soon. But then that leaves the question, what's going to happen to the remaining 40, 50 or so economies that aren't part of this. So I think it's important to remember that Trump has to act before July 9th. If he doesn't do that, then the reciprocal tariff rates go back into effect, the ones that were unveiled in April. So he's going to have to do something. And again, I think we're all sort of still trying to figure out what that something is. I'm sort of sensing winners and losers, winners being defined as those getting an extension, probably through at least Labor Day, and then losers getting probably some increase, though maybe not necessarily as dramatic as we saw in April, because I do think there's a desire to avoid that bond market disruption that we saw then. So that's how I'm thinking about it. But again, I could unfortunately be wrong. We also talk a lot about geopolitics. We hope progress towards peace that happens, but history suggests, at least in the Middle East, it's when, not if, these ceasefires end. So the combination of all three not materializing, that's when you're looking at Santa Trump maybe delivering the coal as opposed to the presents.
But if July 9th is the real deadline for the tariffs, what's the real deadline for the bill? You said July 4th is sort of just made up.
The real deadline is the X date, because Republican lawmakers are going to address the debt limit with that. You have Treasury Secretary Bessent suggesting that it needs to be done before lawmakers are scheduled to adjourn in August. I think we've had a lot more tariff revenue, candidly, than many people, including the Treasury Department, were forecasting at the beginning of the year. So that might actually kick the X date into September if things continue to move in that way. Again, that's also going to depend on what happens July 9th. So I think there's a desire amongst Republicans to get this resolved quickly. So even if they don't get it done by July 4th, I think Trump's going to try to keep the pressure on to get them to do it probably the following week. But to answer your question, right now they want to try to address the debt limit through that. The real deadline is December 31st. That is when the tax cuts are scheduled to expire. So again, I think it's when, not if, Republicans get there, because the cost of inaction is just too high politically. But it's going to probably be some turbulence as we try to land the plane.
Okay. Mailbag time. Harry, come on in. As a reminder to those that send in questions and we use them, we'll send you a nice RenMac trucker hat. I'm going to bring in Harry Chen, the mailbag man. Harry.
Okay, today we have the question come from Sergio Gatto. His question is, who is more likely winner of the incoming The Apprentice, the Fat Chairman edition? Thank you very much.
The Fat Chairman edition? Who's more likely winner of the incoming The Apprentice, the Fed Chairman edition? That's definitely for Neil.
Look, I think the horse race is just an aspect of how this is done. Remember at one point, Kevin Warsh was ahead of Scott Bessent in the running for Treasury. At one point, Howard Lutnick was ahead of Scott Bessent in the running for Treasury Secretary. So there's like this sort of up and down kind of thing that happens, with trial balloons kind of being sent out to the marketplace. As I said earlier, I think, we can kind of go through this. Like, first, everyone knows I'm not a big fan of Kevin Warsh. He's hawkish when it's cold outside. He's hawkish when it's hot outside. He's just always hawkish. I think he's recently made some hawkish comments. It doesn't really make sense for Trump to nominate him, given Trump's dovish proclivities. So to the extent that Warsh gets the nomination, you have to assume that, he's politically pliant to Trump. And everyone knows that he's wanted this job forever, being the Fed chief. So God knows what he would say to get it. I also think that his judgment is terrible. This is someone that this is someone who was, basically calling for tight money, in the middle of an employment crisis. Next up is Dave Malpass. I respect him. Also someone that's generally been on the hawkish side of the fence. I remember as an analyst back in 2008, he was at his perch from Bear. I was working for Rosie at the time. He was calling for 2 rate hikes in the back half of 2008. So, it's everyone has bad calls. I think Malpass, he hasn't really been at the Fed, but he's a competent person. I don't know that he's really in the lead in this role. Then there's Scott Bessent, friend of the program. To me, it's really this simple. If I'm Bessent, okay, I would just say, who was the first Treasury Secretary of the United States? Go. First person.
Alexander Hamilton with the musical.
Who was the first chairman of the Federal Reserve? Crickets. I rest my case. And that's why someone like Scott Bessent shouldn't really be interested. So to me, it's really Waller. He's the guy. He's the best option. Not only has he had really good calls, I think he deserves it on the merits. As we discussed earlier, he also deadlifts. so that's anyway. It's a sort of a Trump adjacent joke there. But he also provides the opportunity for President Trump to put more people at the Fed. Because let's say it's someone like Warsh. I don't know that Powell leaves in that scenario, right? So to me, it's like you elevate Waller, Powell probably resigns his seat in that scenario, and now you have 2 governors that she could name an addition to the chair. And, that allows you to put your fingerprints more on the Fed than nominating someone like a Hassett or a Warsh, someone that would be perceived as more politically pliant.
There you go.
Steve, does that chess game match up with the way that you snakes down in Washington think about the world?
Yeah, I mean, I think Neil makes a good point that I agree with. We've talked about this before. We see eye to eye in terms of, if you're really trying to shape the Fed, you want to put more people there beyond just the chair. I think Waller gives you that opportunity. I think Malpass may be somebody who could be potentially running for a governor position. I guess if I were Warsh and I were trying to pitch this to Trump, I would try to say, okay, I've always been very hawkish. So therefore, when I try to push your dovish views, therefore, I'm going to sort of come at it with more credibility. I'm not sure what the reception is going to be to that there in the White House. And I think personally, just having worked at the Treasury, I guess I'm biased. I think that's a more interesting role. I assume Bessent sees it that way. There's a chance that he doesn't. But if he does, and given his clout within the administration, like I think Bessent and Secretary of State Marco Rubio are sort of two that have really emerged here as really having a lot of sway within the administration. And that's important because those are two important roles. I think the person he recommends, that's going to carry a lot of weight with Trump. So I guess that's sort of how I'm thinking about it.
On that, Steve, what are we watching this week?
Well, really, it's going to be sort of what we just touched on in the sense that, can Republicans in the Senate get this product out, I'd say, before Monday? That's going to be really important. And then when they do, what's the House response going to be? The easiest thing to do would be the House is to take it up and pass it. The worst option is to vote to go to conference, and that's when you get this sort of prolonged negotiation over July, and all the people that don't like this are just going to make their views known, and that's not good, at least in terms of trying to get the bill done. Or you could see some sort of middle option where the House just sends back a different product, not necessarily the Senate. Again, they have to pass the same bill, so maybe that lends itself to some quicker resolution when they come back from July 4th. And then any progress, again, coming up on this July 9th reciprocal tariff date. One option too to remember for Trump is, he likes to escalate to de-escalate. I think it's worth noting that the European Union have their retaliatory tariffs scheduled to go into effect July 14th. So do we sort of see some potential, again, escalation before de-escalation there? So I think that's another important date just to keep on mind.
Neil? We got some numbers coming out next week, don't we?
We do. We have ISM, we have the JOLTS data, and then we have the employment data coming out early. We have the July 4th holiday next week. So jobs numbers are coming out on Thursday, July 3rd.
Anything internationally coming out that sort of piques your interest?
I mean, we'll have all the PMIs coming out globally as well.
Okay.
So that's obviously going to be something we'll be keeping an eye on.
I only say that because I know that, Jeff's been talking about the Kospi on fire and, what's going on in Hong Kong and China. So, Jeff, I don't know if you want to touch on that as you look out for the week.
Looking good. Those are looking good. But really, the breaking news here, I mean, we do this not first thing. We do this around the open on the S&P, now at a fresh new high. Led by discretionary. Now that's being led by Nike specifically, which is not a great chart, but new high. And it is not all tech dominant. So, good news there. And that's what we're watching. We'll update our market cycle clock next week, which will be good because we've been in this kind of supply shock zone, which has been part of these tariffs, and see if we're getting some relief from that. But, in terms of the overall S&P, the reason that the new high is important is because now you've got a breakout and you can start getting some counts. We're on the tape for 6,800. I think that might be a little aggressive, but not to the point where I'm going to take it down. If we take it down, we'll see if there's some conditions that start to develop towards the mid part of the summer. But for now, the trends are reaffirmed, I think is the right way to think about it with this move. So good news. We'll keep watching that discretionary versus staples because I think that will be important. We'll watch broadly cyclicals versus defensives. And then, we really are pretty dependent on what's happening to rates. So rates have obviously been cooperating here over the last several weeks. Don't want to see anything above 460 on the 10-year yield. I think that starts working against equities, but certainly we're in a better spot than not right here. And this new high is obviously important.
All right. Well, I think we'll leave it there. We'll be back. Oh.
Well, yeah, will we? That's the question. Are we gonna do this Thursday? I'm not doing it Friday. I got better things to do on Friday.
No one's listening to me only on Friday.
You guys want to do it Thursday afternoon?
Morning be better for me, but this may not
I'm not
be
around Thursday. I'll be in traveling. I have to go to a wedding. So
all Thursday you're not here?
Well, I'll be maybe in the evening. I'll be around in the afternoon.
Where's your wedding?
Colombia.
Whoa, Medellin.
Like
not the district
South
of
Carolina or the country?
Wait, now we've just offended all our Colombian clients.
Jeez. That's exotic. All right.
Yeah, edit this out.
That's really cool. Wow. Well, join us next week on someday at some time.
Next week at some point. Yep.
We'll be 1 week older, 1 week wiser, and always you can reach out to us at sales@renmac.com for more information. Until then, I'm Steve Duttenhofer.
I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
Have a great week, everybody. Cheers.